in the world's going on with the stock of Hasbro? I mean, this morning, the toymaker reported what was widely regarded as a terrible quarter. The stock got slammed. You know, it was in pre-market trading down $7. But then something funny happened. Management put things in perspective on the conference call, and the stock rebounded, ultimately closing up $3.31 or 4%. Yeah, $10 swing. Makes sense to me. Hasbro stock has already been severely punished since last summer in anticipation of the liquidation of Toys R Us. With one of their largest distributors biting the dust, this was going to be a real ugly quarter. And that should have been a surprise, especially because the company was quite candid in telling us this is going to happen. So sure, the company reported a 23-cent earnings miss off a 33-cent basis, earnings down 79% year over year. Yeah, its sales came in about $100 million less than expected, declining by 15% versus last year. But once the Toys R Us liquidation is behind them, management has some big plans to get the business moving again. Question is, can they deliver? Let's take a closer look with Brian Goldner, the chairman and CEO of Hasbro, get a better sense of the company's quarter and the company's prospects. Mr. Goldner, welcome back to Mad Money.
Hi, Jim.
Brian, were you surprised at the 10-point swing from down 7 to up 3 today?
You know, we were really just focused on communicating to our audience what's really going on, and that we had to get through the Toys R Us liquidation. It will continue through the second quarter in the United States, and then we'll move on cleanly in the third and fourth quarter. We're going to build big programs. Our retailers are incredibly interested in growing with us and our business. We have great POS in our brands, and our retail inventories are down. So we just needed to communicate that and continue to profitably grow our business.
Now, sometimes these liquidations last longer than expected. I know we saw it with Sports Authority. I know we had an outfit, small outfit called Ollie's Bargain, but let's just use them as an example. Talking about the huge amount of toys that were in the channel related to Toys R Us. How do we know that you can clear it up in one quarter coming?
Well, we only shipped a little bit of product in this first quarter, so the rest of the product was from remainder of fourth quarter last year. We held back some inventories across the entire retail channels in order to ensure our new initiatives weren't caught up in the liquidation, and then we'll begin to ship those as we move forward with great entertainment initiatives. We have the Avengers movie, we have our Black Panther home entertainment window, we have the new Solo movie coming in May. So it's very exciting in the second quarter, moving into third and fourth quarter with new innovation and initiatives for a number of our brands and our gaming initiatives.
Your company has always been terrific at returning capital. You had a very big dividend. I was surprised you bought back so little stock. But if the stock stays down here in this next quarter, is that an opportunity to put money to work buying stock, given how little you purchased in the first?
Well, the capital structure of the company is always first and foremost to invest in our business, and we continue to do that. We're rapidly accelerating our transformation of our commercial organization. We did buy back about $40 million worth of stock. We're on track to buy back about $150 million, and our board just approved another dividend increase, which will take place in May, and that's our 14th increase over the last 15 years.
Okay, so let's talk about Black Panther, biggest movie ever. I would have thought that you would have had a little more product out when it first came out. Can you catch up with the home entertainment?
Well, we built the most robust line we'd ever built for a Marvel origin film. So lots of SKUs and lots of great product. But the popularity is amazing, and we're so excited. We hope to catch up by the home entertainment window, which comes this May. And then for the third and fourth quarter, we have a lot of new initiatives. There's a lot of new product that will come to the market, including Black Panther role play and new action figures. So again, it's a business that adds to the strength of Marvel. Marvel's having a great year with us. Avengers should add to that. And we're supporting 6 Marvel initiatives this year, 6 great films, and then we'll go into 2019 with additional Marvel strength.
Should we be worried at all about some sort of ennui, fatigue with the Star Wars line?
You know, I really see that Star Wars has just moved to a new level. It'll be that new high level that goes forward. But we do have entertainment every year, and that gives us that certainty, that visibility to the brand that I think is fantastic. And we're continuing to put new innovations in the market, and the Solo movie should be fantastic this May.
Can we gauge what is away from Toys R Us? In other words, how did you do at other places, other channels, and are you excited about them, including the direct-to-consumer channel?
Well, we are very excited. In fact, over the last 3 years, our U.S. team has added more than 21,000 doors at retail net of the losses of Toys R Us. So we continue to build a more robust retail footprint. We continue to develop new products and innovations for every price point. So this is giving us the opportunity to get great toys and games in the hands of our kids who deserve to enjoy their favorite characters and their favorite play patterns, and then, of course, to enjoy the entertainment initiatives that are coming. As we go forward, what we're doing is accelerating our efforts in Europe, where we need to modernize our retail organization, add some new capabilities, data analytics, digital assets, and more content to commerce. This is all about that omni-channel sales experience. We want the consumer to be able to move from any format to any format and successfully navigate their shopping and buying pattern.
All right, well, I want to thank you for being so clear the whole time. You said it was going to be tough. You said it was going to be tough because of Toys R Us. How are you able to handle what I regard as being, honestly, 7 months of distraction about will they, won't they, will they, won't they? Because this was one of the oddest bankruptcies I've ever seen.
Well, it did come on relatively suddenly as a liquidation. We'd thought that they were going to reduce the number of stores. That's what they'd indicated early in the year. And recognize that while the bulk of the Toys R Us distraction will be behind us after the second quarter, because the U.S. business represents 2/3 of the global Toys R Us business for us, we still have some regions around the world where we don't have perfect clarity. We're waiting to hear about the Asian business. There's an offer there for the Asian business. We hear that parts of Europe may be sold to a European specialty retailer. That's fantastic. And the Canadian business also has an offer. So once that gets resolved, we can move forward. And I'm certain that a year from now, we will not be talking about Toys R Us in this negative light.
Well, I hope people understand that that really is the perspective that we encourage on Mad Money. I want to thank Brian Goldner, Chairman CEO of Hasbro. Great to see you, sir.
Great to see you.
Right, look, I think the worst is over. Does that necessarily mean that you should just go in hand over fist? I think if it came back to where it was, I would. But you know what? Buying some Hasbro ahead of what could be a great second half may be the way you should focus on this stock. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.